property fireside discussion. My name's Rebecca Blake. I'm the compliance manager and also work in investor relations at VentureCrowd. Thank you so much for joining VentureCrowd's chat this evening. Hope you're all well. Everyone's gotten home from work if you've been working, or you're sitting down with a glass of wine or a cup of tea. Just while everyone's logging in, first of all, some initial housekeeping, but probably more importantly, just letting you know that I am speaking to you today from the land of the Turrbal Nation, and of course I recognise their custodianship of this land and pay my respects to their elders and actually, in fact, all elders, past, present and emerging. So for those of you who don't know, VentureCrowd is a digital investment platform that specialises in alternative asset investments, specifically venture capital and also property development investment opportunities. And these opportunities are available to retail and, of course, wholesale investors as well. So as at last month, we have over 72,000 registered members who've invested nearly $290 million with us, and more than half of our investors are repeat investors. Of course, we're very proud of that statistic as we continue to bring solid opportunities to our investing crowd. Now, we think the reason for that is that we're a purpose-driven business. We back businesses that share our goals for a more sustainable and purposeful future. But I think more importantly, that drives to what companies that we actually work with. We work with companies that have purpose at their core. And the way we assess that is by ensuring that each company that we have on our platform meets one or more of the United Nations Sustainable Development Goals. And that goes for VentureCrowd too. Our property projects address a few of the Sustainable Development Goals, including number 11, which is sustainable cities and communities. And that's probably why you're here this evening, interested to talk about this particular property development and, of course, the investor's paradise that is the Gold Coast. But if you do want to find out more, please visit the VentureCrowd website, venturecrowd.com.au, and at any time during tonight's discussion. Now, what I find really helpful is, as we're talking through the discussion, on the bottom of your screen, you're going to see a little bar like this, and probably in about the middle, there's a little box that says Q&A. So that's the question and answer box. If something springs to mind throughout this particular conversation and you'd like us to answer that for you, there's definitely going to be times to answer that question at the end. But I find if you just pop it in while you think of it, we will either get to it through the end, or it could be really meaningful to continue the discussion. And of course, other investors that are online may benefit from that question too. So I'd encourage you to ask it. Now, I'd like to introduce our panelists this evening. Please welcome David Whitting, our Head of Property here at VentureCrowd. Good evening, Dave.
Hello, Rebecca. How are you?
I am great. Thank you very much. I'll just give a quick background on Dave's background, just for anyone that's watching and doesn't know Dave. So Dave's a former lawyer and senior property development executive with over 25 years of experience with some of Australia's leading property organisations. Dave was previously the Queensland General Manager for Growcon, State Director for Multiplex Developments and Project Director for Lang O'Rourke. So Dave specialises in strategy, acquisitions, disposals, structuring, project initiation and approvals of institutional grade real estate assets across the commercial, residential, retail and hospitality categories. Now, Dave, that's a mouthful. You've got heaps of experience. So
There's a little bit,
you're the one for the job tonight.
That's why I've got blonde hair. That's
right. That's right. That's how the experience is hard earned.
Exactly.
So let's dive in. Can you give us a quick overview for everyone that's online tonight, just about the current Australian property market and where the Gold Coast sits within that?
Sure. Thanks, Beck. Yeah. Obviously, the Australian property market has exhibited a bit of a roller coaster ride in the past couple of years, pre-COVID, COVID, and probably post-COVID. I think we can kind of categorise that ride in. So Australia is, of course, full of mini markets. Brisbane, the Gold Coast, of course, being one of those. But in a general sense, over 10 years between 2014 and 2023, the median price of a detached house in Australia rose from 475 to 825,000. So that's almost a doubling in just under 10 years. So
significant. Yeah.
Yeah. the ABC quoting CoreLogic, which is one of the best, statisticians in our business, on 3rd of June this year, reported that every single region was rising, with the Gold Coast up over in values about 1,000 a week over the quarter, or about 2% in the last 3 months. So, things have certainly rebounded. Future interest rate rises will potentially have an effect on that, but I think we would have also said that probably 3 months ago when the rises were happening. So in Brisbane, of course, post-COVID, prices fell about 12% from peak to trough, but on the Gold Coast, they only fell 7.3%. So the Gold Coast is a kind of particularly resilient market, and in the run up to COVID, it rose about 52% over the year, the 2 years leading up to that. So, I think the Gold Coast, where it used to be an extraordinarily cyclical market, is now very much an established market, and one that is probably more resilient than most of the markets in Australia.
Absolutely. So why do you think the Gold Coast area is continuing to attract this strong investment and, I suppose, high returns? It's certainly, people have spoken about the Sunshine Coast, Brisbane, Gold Coast just kind of turning into this one city. What do you think it is?
I'm going to call it my own little name, a big demography. Essentially, and I'm one of those, a baby boomer. The boomers are retiring, and the boomers, when they retire, in a general sense, trade out of their houses, particularly in southern markets. They can trade out of a house and pull, $500,000 or $1 million, and go to a market like the Gold Coast, where they spent most of their younger days on holidays. So certainly, when I was kind of growing up in southeast Queensland, the Gold Coast was very much a kind of holiday market where you went for a couple of years, but not many people lived there. Now it's very much a kind of vibrant city. Its major attractors, of course, are still there. The beach and the sun, and the waves and the views, and short distance to Brisbane, the hinterland, etc. And the other thing, of course, is the infrastructure on the Gold Coast has grown, and befits a city which is about 750,000 at the moment, but will grow to 1 million within a decade or two. So, light rail, brand new hospital on the border, international airport. Unfortunately, I drove down there this morning and dropped my eldest daughter off, who's 25 years old, moving to England for 3 years. So, we actually travel from Brisbane to the Gold Coast to drop her off to go via Asia on the way. So it's really it's its own international hub now, and there is just that kind of giant demographic movement, to places like southeast Queensland, but particularly the Gold Coast.
It's really interesting when you say that. Like, I've taken a couple of trips to Japan, and they've left from the Gold Coast. So it's not like it's Brisbane International anymore.
And that's it. Yeah.
And one would not have. Well, it's probably, if one is not in that area and understanding, I suppose, what's happening, it kind of just gets by the wayside. But it really is becoming that attractor, I suppose. I moved to the Gold Coast for 2 years during COVID, just to precisely be by the beach and be in that particular environment, which is a real eye-opener for me too, and understanding the lifestyle that people have down there. It's really interesting.
Yeah.
Now, the Gold Coast has always been really attractive to investors, but what are some of the particular investment trends that we're seeing right now?
Yeah, well, sure. I think the Gold Coast is a particularly resilient market, but like a lot of Australian markets, it is suffering from a number of things which actually underpin the value of property. So the Gold Coast is outstripping Sydney in relation to growth. Knight Frank said that it was the fastest growing premium market in Australia. The unemployment rate is about 2.6%, which is below the national average. Supply is, particularly constrained on the Gold Coast. There is not a lot of land. and the Gold Coast City Council and others who had determined, I guess, that a lot of that population growth would come in the form of large-scale apartments, are finding that the private sector construction market is no longer willing to put the risk into those. So Hutchies, who's Australia's largest private builder, has basically said, apart from current jobs they've got in at the moment, they won't be doing another large residential tower either in Brisbane or the Gold Coast for the next 2 years. And the risk is magnified when you've got a tower of that size and you've got construction prices which are largely kind of uncontrolled for a very long period of time to deliver those towers, and also additional funding costs on top of that make it difficult as well. So I think what we'll find is that despite that demographic still kind of coming down the chute, it's still going to be incredibly difficult to deliver anywhere near the amount of product that's required to service that market.
Absolutely. Some really salient points, I think, and for people to consider what's actually going to be on the market, in the next 2 years. It takes so long to get those high rises up and out of the ground, let alone secure the sites. But interesting from what we've experienced now with the massive builders, going into bankruptcy in the last 6 months, or shutting down.
Some on the Gold Coast, yes.
Yeah. So, Dave, in terms of property developments, in this particular location in the Gold Coast region, what do you think the key factors are that investors should consider when they're investing in property projects from the ground up, like from the beginning?
Yeah, well, obviously, I think harking back on what I just said, deliverability and scale is small. It's as in smaller is better. The ability to be able to get into a development that is deliverable within a couple of years is going to be pretty important. Those projects, those large apartment projects that require a couple of years of pre-sales to cover the funding to get them going, and then for investors in those to find that the construction price has moved, the developers had to use the sunset date to fold the project and start again. They're incredibly big, lumpy, risky. So I think apartments have often been the predominant let's call it either holiday home or home on the Gold Coast. But obviously smaller projects, individual houses, smaller apartment buildings, I think are those that should be targeted.
Interesting. Now, of course, VentureCrowd does do property development, being in that alternative asset class. We do have a current opportunity that I wanted to highlight, obviously, with your help this evening, the Carrara Project. Can you talk us through what is involved in that particular project and the different elements, I suppose, in the capital stack as well that are available to investors?
Yeah, sure. So we effectively secured this project about a year ago, finished the approvals, and in fact improved what had landed on our plate. We inherited a DA that was not complete for 58 houses, and we managed to increase it by 1, and to improve the designs on the houses and also the communal area. So effectively, it is a development on a ridge at Carrara, so it overlooks the plains directly north and east to Surfers Paradise and that skyline. It's at the end of an existing road, so an extension, and it is the cul-de-sac at the end as well. So it is. It isn't a thoroughfare. Incredibly beautiful property, and we're very, very lucky to be able to secure it. So yes, we'll be delivering 59 houses on the ridge overlooking the Gold Coast, secure gated community, and we're raising the funding for that now. So we obviously raised the first tranche of about 10 million, and we're in the market now with another product for our wholesale investors at 17%. And that'll last for a finite period of time. And we will we're in discussions with a couple of lenders who particularly love the project, and we're getting the best deal on debt in relation to that project. As we speak. So, in fact, we expect one of our term sheets tomorrow. So, I think the lenders in the market are recognising it as a quality development aimed at a demographic that I talked about before, which is going to be flooding up to the Gold Coast and finding that there is kind of very little available stock.
Now, I had a stat here actually about Carrara's growth. It said Carrara was one of Australia's highest growth suburbs with 37.4% capital growth in 2021.
Yeah, absolutely. Yep.
That's really interesting.
Yeah, Carrara is a slightly older suburb closer to the highway, and is the beneficiary of gentrification, I think you would say. So whilst it was kind of sleepy a few years ago, it's now the subject of developers such as us going through and improving the quality of stock. I mean, one thing about the Gold Coast, as we all know, and if you make that trip from Brisbane to the Gold Coast, it can be a bit of a nightmare. Carrara is not far from the rail, and it's also not far from the highway as well. So it probably has easier access than many of the closer beachside suburbs as well. It's very much, and we've as you know done townhouses at Pimpama and Oxenford and various other inner north kind of Gold Coast or outer north Gold Coast suburbs. And we find that we think Carrara is going to be really popular.
And can you talk us through a little bit about, so basically we acquired the site a year ago, and the process that comes with, because I think this particular site had an existing DA, Dave, is that right?
Yeah, that's right. As I said before, we inherited it with 58 houses. We improved it to 59. We have recently gone through a branding exercise too with a group of external marketers. And we can say here for the first time publicly, I guess, the collateral will come, but it'll be known as Kyra. And some of the imagery we've got, a gated entry, a beautiful enclave, and I think Gold Coast, but I think the market in general, I think security is going to become much more important as well. So, as I said, this is a cul-de-sac site on top of a ridge, with a gated entry, and effectively, you'd have to run, 3 or 4 kilometres over the Carrara floodplain to try and get to it from the other direction. So I think that's going to be something that's really important to a number of the demographic that we are aiming for. Obviously that downsizer market, people who are obviously very precious, well, as we all are, about our motor vehicles and things, and also the safety of our families. So the community facilities we've got there are going to be really incredible. A 2-story pool and a 2-story pool house, barbecue area, fire pit, wet edge pool, etc. So it's going to be fantastic.
Absolutely. Thank you for describing a few of those things that are going on in that particular development. And I think we probably have some imagery of that. I'm not sure about now, but we might very soon on the deal page, which is accessed by venturecrowd.com.au. Yeah. And under the property section. Okay, cool. We have a couple of questions coming through, but I'd like to just ask a final question first of you, Dave. So in regards to alternative assets like property, how is funding those helping housing problems and land conservation efforts?
Yeah, look, well, Carrara is a particular case in point. Over 80% of the site is going to be regenerated. So our actual site area goes down into those Carrara floodplains, although we only build on the top of the ridge. So we will be planting over 50,000 trees and revegetating the site. We'll be putting walking paths for our residents through those. So they really will be houses on a ridge with their own common. If you think of it in an English sense. We'll be planting, feeder boxes for birds, and I can imagine, subject to our residents, requests or beehives or something like that for pollination, which is obviously becoming an increasingly important aspect of our environment. So VentureCrowd always tries to do the best possible and sustainable responses, within the market that we're aiming for. This is obviously a market with a price point average of, $1.5 million that can bear and would expect a certain level of sustainability. So we'll be, looking at things like, electric charging points for vehicles within garages and things like that, and solar additions to roofs up on that ridge. They'll catch the sun beautifully up there. Looking to offset the the electricity for the common area electricity for the pool, and with solar on the roof of the facility we've got there, and things like that. So it's certainly very, very high on our agenda.
Awesome. Thank you very much for answering that, Dave. We've got a couple of questions coming through, and one that pertains to something you just answered previously. So, but just before I do that, I actually would just like to start a poll. Just while I'm doing that, now's the time to ask any of your questions. If we can't get to them this evening, we will, of course, be in touch with you via email or phone tomorrow. So just please include your details in that Q&A. We've got them anyway from when you registered for the webinar. So obviously this poll is just intimating if you are interested in this individual project. 17% paid monthly as part of that capital stack, as part of a preference share with 24-month term. So I'll leave that up for just a second. But the question that actually I wanted to ask was about that $1.5 million price point, Dave. This is from Michael. Basically, what gives you so much confidence that you'll be able to sell these finished dwellings and I suppose get out of the project for 1.5 mil?
Yeah, well, look, we've obviously done intense market studies using, stock that has been sold that is comparable in the market to ourselves. And in fact, we think a lot of the stock that we've actually compared is inferior, because we have a particularly unique product with effectively houses, and we've compared them against townhouses. These are on a ridge with expansive views over the the Carrara Plains and to the GoldCoast. Almost all, I think, of the comparable product doesn't have that, and it's extraordinarily unusual for a townhouse development to be gated. We don't call ourselves a townhouse development because it's really usually no more than two houses together. There are a few small runs of houses in fours or fives, but it's quite a different product to your normal kind of townhouse development. So they're very, very much comparable to houses in the area, which sell usually for a bit more. But you've got the added, kind of advantage for our downsizer boomer market, and for families where, you can have this much more incredible common area facility that you would obviously not be able to build within your own house, that can be shared with just a very limited and exclusive number of residents. And what we're really looking to do here is, build a little community out there on the ridge. And we're confident that not only on a per square meter basis, looking at comparable rates, but on a price point basis, on the level of finishes that we intend and fixtures that we intend to put in those houses, and with the beautiful kind of wet edge pool and common area facilities that we've got, that yeah, we'll easily get to those price points.
Thank you. That's a well-rounded answer, Dave. My question actually comes from anonymous, attendee, just in regards to the actual interest rate that is being paid on this particular product. Like, it's 17% paid monthly. I must admit, like, when I first looked at that,
17% per annum, 17% per annum.
Per annum, I'm sorry, please.
Yes, just to be, that might answer the
17%
question.
per annum.
Yes.
Regardless,
Yes.
still a high rate.
Still a high rate, yes.
Yeah, and yeah, I was like, oh, okay, well, wow, what's happening in the market that means that for us and VentureCrowd's business, that we're able to pay 17% per annum paid monthly. Where is funding at, I suppose, more broadly in the market for these types of projects? Yes,
well, look, we're well over, about just over half the target for the funding, the equity funding that we need for this development. So we had a product out about a year ago. We don't like to raise too much money at those kind of rates right at the beginning, otherwise we have to pay a lot of interest on that. So this is the product that will have a limited time frame for which it's open. And we will obviously also look to refinance that later on to reduce that rate across. So if investors are interested, they should get into it. But certainly everyone will have seen the rise in interest rates, and the cost of equity has followed that, so that products that we might have put out a year ago and required 12 to 15% are now commanding 17%. The cost of debt has gone up from 6 or 7% to about 9% as well. So if we weren't paying those kind of rates, I think others are, and as long as the project can take it, as long as we have a strategy to recirculate that and get lower interest rates later on, that's certainly the tactic for us.
Thank you. Now, also, you spoke about builders before. Have we decided on a particular builder for this project?
No, we haven't had to decide on a particular builder yet. We're getting designs finalised. We've talked to 3 or 4 builders, so we have 3 or 4 on our radar who we think are perfectly kind of suited for this job. We generally do like our builders to be able to do both the civil works, so the roads and the sewers and the pipes and everything, as well as the houses. Some developers split it, and what you find is the civil contractor walks off the job, the house builder comes in, the pipes are laid in the wrong place. The builder is complaining about the fact that civil works have to come in and be redone and things like that. So we do limit ourselves generally to builders that can do both for us. So those builders obviously are of a certain size and capacity. We've got a development in Albany Creek at the moment. Stage 1 is almost complete with a builder who is doing that for us. That's a builder that will be considered on this, but we also look at their financial capacity. We look at their workbook coming up. We do it in conjunction with our debt funder, usually, who has had experience with these builders, with other developers on other projects. And if we haven't used that builder before, we effectively get their CV, not from their lips, because everyone lies about that, but certainly from the debt funders that have funded those kind of projects before. So, and we can get a pretty good read on the quality of those groups.
Thank you very much. Dave, we've got 1 minute to go, and I'm conscious that this webinar wraps up at 6:30, and there it is. But I just wanted to ask one last question from Ben. There are some other questions that have come through. We will get back to you. Just make sure you provide us with your email address tomorrow. But Ben was asking, what's the biggest risk into this particular development, or I suppose to this investment, really, Dave, in your view?
Yeah, sure. Look, I think the biggest risk there's usually several big risks we manage. I talked about revenue. We have a high degree of competence about that. Build price is the biggest single component within your cost structure. We obviously move to to qualify that risk. So we come into a feasibility at the beginning, usually with a very kind of fat rate, and then we put a rather large contingency on top of that, and then we work to work with the builder, usually that has been selected in a design phase, to modify the architectural designs to suit the build structure, and also the budget that we have set for the builder. We're going through a process at the moment on our Cannon Hill development, what we call an ECI, early contractor involvement process, where we give the builder the budget price that we want. If the builder can reach that price, then effectively they can get signed up for the job. If they don't reach that price, we can go elsewhere. So we'll go through a process like that here. So they're probably the major risks.
Thanks very much, Dave. I really appreciate your insight and, of course, your experience in talking about this particular investment, but also property development in a broader term as an alternative asset class. And thanks everyone who attended. We're just a couple of minutes over time, but I'll just let you know that you can get a copy of this webinar. We'll send that out in the next day or so. And I'd refer you back just to VentureCrowd's website at venturecrowd.com.au if you would like to take a particular investment in this product, Carrara. You can post any questions also on that particular deal page on the website. They'll be answered by our team. Of course, feel free to email us at hello@venturecrowd.com.au, or just give us a call on 1300 039655. Thanks very much for your insights, Dave. Have a great night.
Thanks to the audience.
Thank you very much. Yes, much appreciated. And we'll see you on the next webinar. Bye for now.